and welcome to DukascopyTV. Today we have another collaboration interview with financial newspaper L'Agefi. Journalist Anne Rethoret will be discussing Islamic banking with John Sandwick from Safa Investment Services. Over to you, Anne.
Thank you, Monica. The creation of Sharia-compatible products has evolved at a yearly rate of 15 to 20%. Mr. Sandwick, you say that Islamic banking has tremendously evolved over the last 5 years. How does this not apply to asset management?
Well, thank you for the question, Anne. I like to think of Islamic asset management as a new frontier for Swiss private banking. There's an enormous potential market out there, and very few banks are focusing time and attention and resources on the growth of this market. From a few years ago, when we had only a few billion of Islamic Sharia-compliant assets, now we have an Islamic asset market that's at least $100 billion or more. In other words, we've seen enormous growth in the number of investable assets. And when I say Islamic assets, I'm talking about assets that meet professional standards for investing, but also have a fatwa, or a religious scholar's confirmation that the investment asset meets Sharia standards for Muslim investors. Now, we see this universe of assets as at 100 billion strong today, and it's growing fast. But the potential for the Muslim saving community, for Muslims who want to have their investments made according to Sharia, we count that in the trillions. At least $3 or $4 trillion of Muslim-owned wealth is professionally managed in the world today. So the potential for the market is enormous. Islamic banking ostensibly and technically started in 1975 with the opening of Dubai Islamic Bank. For the first 25 years or more, Islamic banking was essentially just retail banking, a little bit of corporate banking. But then in 2002, we saw oil prices go from $9 to $12 to $15 to $25 to ultimately to $150 per barrel. And since 2002, we saw a parallel explosion in the growth of Islamic banking. You know, banking is a big term. You have retail banking and corporate banking and investment banking and brokerage and trading banking. And then you have the fifth sector, asset management banking. In the first four sectors, Islamic banking evolved to become essentially world-class financial services, financial intermediation that met the needs of savers and users of capital. It's that fifth area, asset management banking, which never really evolved until right now. We're hoping to change that with the launch of Safa Investment Services.
How is this relevant to the Swiss private banking industry?
Well, that's a good question, Anne. Swiss private banking, as you know, is going through a very significant evolution. Right now, as we speak, there is a significant changes in the legal and regulatory environment for wealth management and asset management in Switzerland for its traditional customer base of Italy and Spain and Germany and France and Great Britain and the United States and elsewhere. And given these new regulatory realities that the Swiss private banking industry is facing, without any doubt there's going to be an impact on the revenue. And so Swiss private banking, private banks and the Swiss private banking industry has to rethink and relook to where they're going to apply their strategies and resources to evolve and grow their revenue. As you look around the world, of course, many Swiss private banks have gone to Asia to look for new markets. Asia represents for them fast-growing economies with high savings rates and a higher level of sophistication amongst individuals, high net worth individuals who may or may not have had much experience with private banking before. However, there's another market that's much closer than Asia, literally at the doorstep of Switzerland, and a market where Switzerland and Swiss private banking has a very long tradition. And that market is the Arab world, especially when we talk about Saudi Arabia and the Gulf states. It's the one area of Islamic banking that has really never evolved. And that's why we've created this new business, Safa Investment Services, so that we could, from Switzerland, deliver Islamic wealth and asset management. We think the market is enormous. Already today, we estimate at least there's $200 billion of Saudi and Gulf money in the Swiss private banking system. It could be much more. It's certainly not less.
No, it's very interesting. In your opinion, why do Sharia-compatible portfolios bounce back faster from a crisis?
You know, it's that was the unintended result of 5-6 years of intensive research and analytics. We started looking at Islamic assets around 2006, long before the financial crisis started. The first thing we had to do, because we're portfolio allocation specialists, just like in conventional asset management and private banking, the core business of what we do is asset allocation, and that involves, first and foremost, looking at every potential investment in the entire universe. Traditionally, we go to Bloomberg's and we go to Reuters or we go to Morningstar and we collect enormous amounts of data on every possible investment we can make. We filter and sort through that data, and then we use what we call portfolio optimization tools to do an asset allocation that is correct for the client profile. We do this for only the Islamic asset space. And from that database, we're able to extract the data and put it through portfolio optimization software, constructing income balanced and growth portfolios representing low, medium, and high risk investment strategies. And we're able to, on an apple-to-apple basis, comparing our, for example, US dollar balanced portfolio to, let's say, for example, Credit Suisse US dollar balanced portfolio, where truly and honestly the two portfolios are identical in their construction, and their risk metrics, and in their investment strategy.
So the difference
Now,
being?
what we've discovered, and this was the great surprise, is when you look at a 5-year period starting just before the financial crisis, for example, from January 1st, 2008 until July 31st, 2012, an Islamic portfolio had positive returns of 17%, where for example, Credit Suisse or Julius Baer or BlackRock US dollar balanced portfolio had negative 3%. There was nearly 20 percentage points outperformance by the Islamic portfolio. But that's not just the full picture. That's only part of the story. During the worst part of the financial crisis, and we're talking in the months following after the collapse of Lehman Brothers, the conventional portfolios were down 30%. And they took 26 months to get back to their original point. The Islamic portfolio was down 15%, and it recovered in 9 months. So you don't have to be a Muslim to appreciate less risk and more profit. I think everybody appreciates that.
Thank you very much, Mr. Sandwick. This was very interesting.
Thank you.
Back to you, Monica.
Well, thank you to Anne and John for that incitement into Islamic banking. For all the Dukascopy TV team, it's goodbye for now.